The biggest tax overhaul since 2017 is now law. And if you are a freelancer, a 1099 contractor, or self-employed in any way, it changes the math on almost everything you do at tax time. The One Big Beautiful Bill Act, or OBBBA, was signed on July 4, 2025, and most of its tax provisions kicked in on January 1, 2026. That means your 2026 tax return is the first one where these new rules apply. This video breaks down every provision that matters to you as a freelancer, with real numbers, so you know exactly what changed and how to use it. Welcome to the Freelancers Wealth Blueprint, where we help freelancers and self-employed professionals master taxes, build wealth, and keep more of what they earn. If that sounds useful, subscribe and hit the bell so you never miss an update. Let's start with the single biggest change for freelancers: the Qualified Business Income Deduction. If you file a Schedule C, you already know about the QBI deduction. It used to let you deduct 20% of your qualified business income from your taxable income. Under the OBBBA, that rate goes up to 23% starting in 2026. And it is now permanent. Before this bill, the QBI deduction was scheduled to expire after 2025. That would have been a massive tax increase for every freelancer in the country. Instead, it is locked in and improved. Here is what that looks like in real numbers. If your qualified business income is $80,000 this year, your QBI deduction at 23% is $18,400. At the old 20% rate, it would have been $16,000. That is an extra $20,400 off your taxable income just from the rate increase alone. There are also two structural improvements. The phase-in range for the wage and capital limitation has been expanded. For single filers, it went from $50,000 to $75,000. For married filing jointly, from $100,000 to $150,000. This means more freelancers, especially those in specified service trades like consulting, law, accounting, and healthcare, can claim a full or partial QBI deduction at higher income levels. On top of that, there is now a minimum QBI deduction of $400 for anyone with at least $1,000 of QBI from an active business. Now let's talk about the standard deduction and tax brackets. The OBBBA makes the higher standard deduction from the 2017 tax law permanent. For 2026, the standard deduction is $16,100 for single filers, $24,150 for heads of household, and $32,200 for married filing jointly. The 7 tax brackets from the Tax Cuts and Jobs Act are also permanent now: 10, 22, 24, 32, 35, and 37%. Without this bill, brackets would have reverted to pre-2017 levels, meaning higher rates for nearly every income level. That did not happen, and that is good news for your bottom line. Next, the SALT deduction. If you live in a high-tax state like California, New York, or New Jersey, this matters. The state and local tax deduction cap has been raised from $10,000 to $40,000 for tax year 2025, and it increases to $40,400 for 2026. The cap grows by 1% per year through 2029 before reverting to $10,000 in 2030. There is a phase-out for higher earners. Starting at $505,000 in modified adjusted gross income for 2026, the cap is reduced by 30 cents for every dollar above that threshold, but it never drops below $10,000. If you are a freelancer in a high-tax state earning under $500,000, this quadrupling of the SALT cap could be a significant benefit when you itemize. Now here is a change that affects how your clients report what they pay you. The 1099 NEC and 1099 MISC reporting threshold has been raised from $600 to $2,000 for payments made in 2026. Starting in 2027, that threshold is indexed to inflation. This means clients who pay you less than $2,000 in a calendar year are no longer required to send you a 1099. But here is what does not change. You are still required to report every dollar of income, 1099 or not. The threshold determines what your clients must report, not what you must claim. Let's move to equipment and depreciation. If you buy equipment for your business, laptops, cameras, software, furniture, vehicles, there are two big wins here. First, 100% bonus depreciation is back and permanent. If you buy a qualifying asset for your business, you can deduct the full cost in the year you put it into service. Second, the Section 179 expensing limit has been raised to $2.5 million, with the phase-out starting at $4 million. For most freelancers, the practical impact is simple. Buy what your business needs, deduct it in full this year, and reduce your taxable income immediately. Now, let's cover the new car loan interest deduction. This is brand new. If you purchased a new U.S.-assembled vehicle between 2025 and 2028, you can deduct up to $10,000 in car loan interest on your personal tax return. The deduction phases out above $100,000 in modified adjusted gross income for single filers and $200,000 for married filing jointly. For freelancers, there is an important nuance. If you use the vehicle primarily for business, you may be better off deducting the interest as a business expense on a Schedule C instead. The business deduction lowers your self-employment tax as well, which the personal deduction does not. Talk to your tax professional about which route saves you more. If you earn tips as part of your freelance or gig work, there is a new deduction for you too. The OBBBA allows eligible workers to deduct up to $25,000 in qualified tip income per year for tax years 2025 through 2028. The deduction phases out at $150,000 for single filers and $300,000 for married filing jointly. Starting with the 2026 tax year, tips must also be separately reported on the 1099 NEC using a new tip occupation code. If you work in delivery, rideshare, food service, personal services, or any of the 8 IRS-designated tipped occupation categories, review whether you qualify. Now, let's tie this together with what has not changed. Your self-employment tax rate is still 15.3%, 12.4% for Social Security, and 2.9% for Medicare. The Social Security wage base for 2026 is $184,500. You still need to make quarterly estimated tax payments if you expect to owe $1,000 or more. The due dates are April 15th, June 15th, September 15th, and January 15th. Here is what I want you to take away from all of this. The OBBBA is not a minor update. It is a structural shift that touches your QBI deduction, your standard deduction, your tax brackets, your SALT cap, your depreciation rules, your 1099 reporting, and potentially your car loan and tip income. As freelancer, you are in a position to benefit from nearly every one of these provisions, but only if you know they exist and plan around them. Review your projected 2026 income now. Recalculate your quarterly estimates with the 23% QBI rate. Check whether itemizing makes sense with the higher SALT cap. Talk to your tax professional about bonus depreciation and Section 179 for any business purchases this year. And make sure your bookkeeping is up to date so you capture every deduction available to you. Subscribe for weekly videos that help freelancers pay less in taxes and build real wealth. See you in the next one. This content is for educational purposes only and does not constitute tax advice. Consult a qualified tax professional for guidance specific to your situation.